So, welcome to Conversations with Ira, Judd, and Pax. Here we go. The recording is started. Okay, Ira.
What do we got? You guys open it up. You guys, you know what? There must be some questions that people want to, because this is such a. I love the volatility, but today I hate the for the last few days I've hated the volatility. But that's being said, I'm very patient. So there were really, if you seized them, there were some great opportunities today in this land of. I don't even know what to call it. It's so insane. It's just insane. That's all I can say. It's insane. It's insane because you cannot be surprised. You know, I went back and read 2 blogs ago, and that was my point about why I said he called them a currency manipulator, because it was a way for him to back out of the tariffs and still look like he was being tough. And that's exactly what's taking place here. Now, I can say that. Can I time it? No. And I always tell you, some of these things, I don't care how prepared you are, you can't time them. You can't time when he was going to do this. What set this off today? At this time? Oh, after I watched the soybeans rally 25 cents in a day and a half? Did they know? Who knew what? There's definitely... Are they playing in different arenas? There were definitely things here in which some tells, and the metals were heavy all morning.
Well, the metals, that number on the sheet, that was it for me this morning when I saw it at 5 o'clock this morning.
I know, yeah, but I'm just talking about the way they traded. They were trading heavy, even when they went back up into to 15, 36, 37, 30, and then they couldn't hold it, and then they're down in the 20s, and they rallied up. The metals felt heavy. Usually I would get trapped. I never even tried to get long today. Never. Only I did. I missed that 1488 area was such a big area. That was my big area last week, but it was so fast. And then the silver broke down to 51 cents on the SEP. So, and then I could actually maneuver in. So that wasn't bad. But it was still, you kept looking, going, this is insanity. What is going on here? And then, by the time I saw all the tweets and everything, I go, really? This is what's moving it? Because really, when you look at it, if you listen to the idiots this morning, the talking heads, the gold was up because of Hong Kong. Well, I'm watching gold break $50, and Hong Kong had not disappeared off the radar. In fact, it was heating up. So we know that wasn't the case. People just say ridiculous things. I mean, there were some stupid comments this morning where if they weren't really tragic and sad, they'd be laughable. But people talking about the possibility that the U.S. would come to the Hong Kong demonstrators, so not a chance on this God's earth. You know what? Not a chance, because anybody who gives them moral support at this time, you're going to own what you don't want to own. And Trump has actually done a fairly good job of trying to stop himself from being really stupid. Do not get involved in this. It will run its course. This is not Tiananmen Square, all those who are calling. I just don't believe you'll see that. China's in a far different situation. She's trying to do a lot of things in the world now. And I think China would really hurt itself dramatically if they came down with a heavy military response. So I think people have to you know what? You've got something to contribute to this? Back channels. It's like Justin Trudeau yesterday. Really? You're going to get out there in front of this? I don't think so. You got enough problems with China right now anyway. If people just don't think this through. I go back to 8 months ago, 9 months ago, when Kramer was blowing his big mouth off going, the United States is pushing for regime change. That's what they want. That's what these tariffs said. They want regime change. And I thought it was reprehensible, that you would even say that, because it's so far beyond the ken. you're dealing with an autocratic society for the most part, who's undergoing severe changes, and especially with regards to Hong Kong, because Hong Kong already underwent those changes. But you have to be careful here, and the people in Hong Kong have to be careful because Taiwan is right over the precipice, and if China makes a statement, be careful, and these idiots aren't careful, and then you get, the tweets about the tariffs, which made perfect sense. Now he can portray himself as the great protector of the American economy because he's the only one who's dared to challenge him as a currency manipulator. Yeah, I got it. So that is where we're at, and you've seen all the action that has come off of it. The amazing thing is, and Santelli actually captured it well this morning too, which was how could these yield curves continue to flatten today? If you don't think that's a problem, because today is the day they should have steepened out, going, okay, you got that kind of rally, you got that kind of power, but it didn't. The curves continued to flatten. So these central banks own this market. It's theirs. I have a sense of what Powell should be doing, just if he wants to get out from under the threat of what this flattening curve portends, especially to the banking industry. And you see, listen, we've discussed so many times the European banks, and we see how well they're doing. It's nothing. There's nothing that helps them. You keep giving them the paddles, and there's no response. So that's where we lie. And really, the severe rally in the equity market was as they would say on Seinfeld, breathtaking.
Yeah, to the wrong number.
Well,
the absolute wrong number.
Yeah, I know that 2942 area. I was prepared for it until I wasn't. I mean, it's just so fast, and you got to scratch your head, going, "What's going on?" I'm not an automaton, and I don't trade that way, so I had to stop and take a really good look at what was possibly going on. So what else? What else is on the burner? That's where I lie right now.
I personally thought it was a lovely trade.
Yeah. No. Well, if you're prepared for it, and you didn't try to make it happen, but you kind of used it. It provided nothing but great opportunities.
Really did, and I exited. We got in. Almost the whole group got in long really well. Got long really well right out of the opening range, and we had something. Ira, we had the opening print and the high of the opening range were the same, and that's a bearish signal for me. But if we take it out, it's a bullish signal for me. And we had an unusually large opening range this morning, so it looked like we were going to try to push a little bit lower, and but I didn't really believe it. Anyway, when we took out that 79.75, we all got long. By the time I can get my orders in, we were already past the next. We were already past the first target, 89.91. It was just straight up.
Oh yeah, my machine was bogging. I was trading the metals and the bonds, and I was bogging bad because I'm seeing prices and I'm trying to execute on them, and I'm not getting anything. So it was long past due, but that's just the connection I'm on. And I'm not complaining.
It was everybody because my system wouldn't update the NASDAQ.
Yeah.
No.
A lot of guys had it too. A lot of TT had it.
It's just the arena in which we live in, and with great technology, comes things that we're not used to seeing. But that was powerful. That was all from a tweet. Gee, I wonder if anybody knew that tweet. But all from a tweet. It's amazing. It's amazing.
We talked about it in the room, and there was one of the guys spends like $500 a month on a news feed. And he didn't realize that Citadel, Jump, and DRW pay for that same feed, but they're paying more money and they get it 60 seconds earlier.
Yeah, imagine that. That's, you know what? That's called smart money.
Yeah, it's you gotta see it in the price. You can't wait for the headline because it's after the fact.
Yeah, you're just, you know, yeah.
I wanted to ask you about we've talked a lot about the yield curve steepening, and I wanted to talk about how you're interpreting the speed and the velocity in which the yield curve has flattened since we last spoke.
Who is this, Angelo or Pat?
It's Matt. It's Matt. Pat.
Okay. Yeah. Here's the way that I see this, because last week was, again, you know, there were a few days last Wednesday was absolutely, I hadn't seen that, and that was to me a pure panic situation. Somebody was caught really bad, you know, kind of thinking like I would, you know, but I trade rather than sit there, you know, and put on these massive positions, at least until I get it right. And it just hasn't been right. I get paid one day, they take it back the next day. That's the way this has gone now. So there is first of all, people are panicked. And that's what you saw last Wednesday and today. That's why it's so consistent, and it's still going on. There are a lot of people who had steepeners on, especially after the Fed had turned here, and they just got caught off here. And again, I think the Europeans are probably more responsible for it, because the lower they go, the more negative they go, they put pressure on everything else. And I read, what's his name, had a nice little piece yesterday, Raul Paul.
Ron Paul?
Know who that is?
No.
No, not Ron. R-A-U Paul.
Yeah. Realvision.com.
Yeah, I know who he is. Yeah.
Yeah, it's pretty. So he had a piece out, and he's right. He said, look, it's hard to wrap your head around it, but for the banks, for investors, if you're in Europe and you have $1 million to put in the bank, you're not putting it in the bank. So you'll buy a bond, a sovereign debt, because it's safer than being in the bank. Because if you go back to what they did in Cyprus, when they bailed in the large investors, the large depositors, you know, if your funds are only guaranteed to 100,000, and after that they're going to use your funds to bail in banks, you're not putting your money in the banks. So you're forced to buy treasuries, and you have to look at it, or sovereigns, I should say, and you have to look at it like you're almost paying an insurance premium. You know, in Europe, they don't have FDIC insurance costs. But, you know, if you're a large enough investor, you go, hell, I got all this money. I'm not sticking it in my mattress. I got to put it somewhere. And the sovereign debt market keeps going up because the ECB insurance is going up. I'm a winner. Because I'm sure as hell not putting it on deposit in any bank. And their money market funds are not nearly as sophisticated as exist in the United States. So when you look at it through that prism, and I didn't look at it through that prism, but I give them a lot of credit. It's a good analysis. And I think there's some of that going on. But that was sheer panic over the last, I would say, 96 hours of trading. People just panicked. You had that one massive down day in the S&Ps. Yeah, we came back from it, but that unnerved people in a big way, because you really couldn't see you can invent some reasons for it, but you've got money down at zero, basically at zero interest rates again. You have, earnings in the United States haven't been bad, so there's a shitload of reason. And how do you get caught behind the eight ball in the equity markets? People were absolutely in panic. And I think they just kept pushing. And they kept pushing. They go, hey, we're not stopping it. We don't.
About the yuan breaching 7, and you were talking about
that too.
Happening a couple months ago.
Oh, Ira, did you look at your favorite, one of your favorite crosses today? The yuan yen. Take a look at that.
Yeah. And you saw with the yen, which was just preposterous. Well, the yen's been running up, but that's Japanese investors. Are you going to tell me that they recoiled and started? I highly doubt it. But the market was set up for it because, again, that risk-off profile was back in play to a certain extent. It's not as pure as it was when we were in roll mode, risk on, risk off, and everything correlated perfectly. We haven't had that. You get some marginal correlations that drive a few other correlations, but it hasn't been so pure. And when the yen dropped, in the face of all that, that was like amazing too. And the euro yen has been such an interesting cross throughout all of this.
It was an unbelievable opening range trade in the yen futures. It was straight down.
Yeah.
You had no heat on the trade if you took it.
None. So, somebody, of course, knew that this was coming. Because I'll argue the soybeans, the currencies, they say, well, why were the S&Ps lower? Well, the S&Ps were lower off all the chatter about Hong Kong, that people were really afraid that was going to blow up, and then all of a sudden, well, maybe it's not going to blow up, and they couldn't wait to reverse it. Except it was also interesting that the interest rates were under pressure. Yes, I know that we had a little hotter CPI number this morning, but so what? That data hasn't affected the markets, and it really didn't affect it dramatically today. It was more the Trump tweet that drove interest rates, forced an unwind, especially of the S&P bond spread. Dramatically, I don't know. I never got to where I checked it today to see if it held any significant areas that I should have been interested in that I'll beat myself up for later.
And it never got high enough, Ira. To put in bonds, put in an ORA today, got the stops, and went right into the moving averages and momentum and rejected. So the weeklies, you still have gaps on the weeklies and the SPU bonds and the NASDAQ bonds, and the risk spreads are not confirming this low.
Yeah, well, you know what? And again, we have all this stuff going on, and European yields are still. The German is still negative 58.5 last I checked. The French, they're still there. They really haven't moved much off the bottom. Bottom, whatever. We're negative numbers, so now the top, because I don't know where that's going. But I think going back to who was that, Matt? Who asked that question about the yields?
Yeah, me.
Was that Matt?
Yeah.
Okay, so I think people really on Wednesday. Last Tuesday, Wednesday, woke up to everything we've talked about in this room, that central banks have absolutely lost, they haven't totally lost their credibility, but they've come close to blowing their entire wad. And people are getting nervous that, hey, these people really don't know what they're doing. It's a big bet to make. And outside of those who need access to them, who, if I have to hear Kramer tell me what a great job Jerome Powell is doing every morning, well, I don't know. It all depends how you define what a great job is. Maybe he is doing a great job. Not the way that I see it in the market. Then you better damn well tell me why gold has rallied $200 since the last Fed meeting, or not the last Fed meeting, but the June meeting, where he really unleashed some demons. And I'm talking about financial demons that the market caught on to. They're lost, and the market is beginning to sense that they're lost. Nobody wants to say it. And you just go, well, I hear you say it. Yeah, but nobody listens to me anyway, as you can tell. I'm on CNBC. They blow it right off. Even though I get on telly at times, I go, this is all stuff we've talked about. It's the one nice thing about having a blog, besides, that it coordinates my thought process and allows others to help aid my thought process. So those are good things. But you can go back and read it, and sometimes it breaks your heart. But you go, this is stuff that we've been talking about. This is not new things. This is not new. And when I've done Santelli hits, it's there. It's there in black and white, but you know what? They don't want to, because it's not the theme of the day. It's only when the theme of the day that people get, whoa. But I think in answer to Pax is that last week we really got to see a picture of what happens when the market senses that the central banks are truly losing the market's credibility and investors' credibility. Because yeah.
No, I was just gonna. I was just. That was the first thought that came to my mind Monday, when the S&P went 140 lower, 100 points at the close, went down to the 200 day, and then down to 27.75 and popped. Gold went from, I don't even know where we were in gold, 14 and a quarter. No, not that, 14.50.
You were up at 4. Gold was at the 15, 16, 22 level.
No, I'm talking about last week when you were gone, Judd. We were
exactly.
Right, and then all of a sudden I looked at the 30-year. We're trading at 163 even and flying. It was unbelievable. And gold up $15, and the S&P all over the place. No idea where it wanted to go.
Yeah.
And that's the first thing. This is not. This isn't a testing of Ira's thesis that gold is not a hedge against inflation, but absolutely a hedge against the central banks losing control over monetary policy. This is proof of it.
Yeah. Well, except that nobody will say, you can't. It's like one of those. It's a hard thing to say out there. Although I will tell you, Santelli had an interesting guest yesterday. I've never been a great big fan of his, and I've actually sat at a round table with him on 2 occasions. But the more he's on and he's more comfortable, Vincent Reinhart, who's Carmen Reinhart's husband, who was the chief economist at the Fed back in the early aughts up until about, I think, 06 or 07. And he's actually gotten pretty good. And if you go back and watch that Santelli hit, even he is criticizing the Fed. He's criticizing them. Watch it carefully. And when I asked Rick about it late in the afternoon, when I finally talked to him, I said, hey, Vincent Reinhart was really critical, which was so out of character. He says, yeah, I thought that same thing. It's a very interesting hit to watch because he really takes them on as much as he will, because once you adorn yourself with the Fed costume, it's a very close-knit club, and they don't do that. But he was, I thought he was pretty sharp about it. Go back and look at it. I think it's really worth watching, and I think it's a very important statement because it answers Pax exactly. We're not the only ones seeing it. There's some people who are really raising some big questions about this because you know what? They've made a huge bet. It's you and I can. We can go. The Fed is. The Fed has really been out, but they have a $4 trillion bet on. Mm-hmm. And coupled with the other central banks, it's a massive bet. And what do you mean? Because they really, at the bottom line, and I challenge anybody, go ahead, bring whoever you want out. Bring whoever you want. You tell me what their exit strategy is. If you can tell me definitively that they have an exit strategy, how to get out of this, then you know what? I'll get out of all my gold. I'll get out of all the plays that cause me to be hedges against certain viewpoints that I have. If you can tell me what their exit strategy is and that you're comfortable with it, I'll accept it. But give it to me. I'm willing to listen. I'm willing to listen. I get a lot of emails from people, and I said, just tell me what your exit strategy is. Tell me what your exit.
I have no idea. I've got all kinds of conspiracy theories boiling up in my mind, but none of them based in reality. But I want to ask you about, that leads me to another question about their ending QT so quickly. So do you think, and I don't know if I'm off base with this, but do you think that they ended QT because they feel like they've got enough liquidity at this point right now to start the QE4 or 5 or whatever the hell round this would be?
No, I think that, remember, and I'm using the Fed's word, Janet Yellen, the embarking upon quantitative tightening, shrinking the balance sheet would be like watching paint dry. Oh, now that's a quote. That's a quote from Janet Yellen. It'd be like watching paint dry.
Yeah.
So now that they figured out it wasn't quite, but I then go back to Druckenmiller's comments, which I've cited many times, which is they made a mistake, and he's not the only one who said it, but he said it very publicly in December, that the double shotgun approach was a very flawed approach. He said that in December, in the middle of all the supreme volatile situation of the last quarter, and that was right. And I cited it in my blog on the day he said it, because that's exactly right.
Remember that.
And it's really, and Santelli and I had talked about that much earlier, not in such eloquent terms, but that put it really together. And the fact that he called that in the way that he did, I thought was very good. And they thought they understood how this worked, that this was going to really be easy, not a problem. But they should have done one or the other. They should have started raising interest rates or quantitative tightening. And I always thought they should have begun quantitative tightening and let interest rates sit there and see what the effect was going to be. But they went both. And it was more, and so I truly think in January they just panicked. They saw certain things take place. Powell saw certain things. He heard certain things. Mnuchin heard the certain things, and that liquidity was tightening. Plus, you threw in the change in the bank regs for year end, and they got really squeezed tight. And liquidity is being squeezed right now because some of the bank regs. And as somebody I know very well has written about, with the massive amount of T-bills entering the market, as the Treasury, is building up its funds, and you saw, this is an amazing thing, is that the curve is flattening while we're running huge deficits. I mean, the announcement yesterday or Friday was we've already surpassed 2018's deficit, and we have 2 months left to go. And people are still running to buy U.S. debt all the way down the curve. You're insane. You're insane. And I know you got needs, but this is where the Treasury and the Fed really need to do something about this, because it has wreaked havoc. And I think I think they panicked here because with all the amount of T-bills that were coming to market in order to do the funding, they got nervous that there wasn't going to be enough liquidity in the system and that they could really cause problems on the short end.
That's
So Ira, about 2-3 months ago, you made a comment and I wrote it down. You said if the yuan gets above more than 7 yuan to the dollar, that it's going to be a big signal of exported deflation around the world. And
right.
When it hit that number, that was one of the big catalysts helping us in the selling that happened the last few days. And then it got to 7.1 yuan to the dollar about. And now today it's, risk on, and yuan is back up a little bit. So, we don't know if there's a number where people really pay attention, but I think the idea that that's a deflationary impulse is really the scariest concept in that idea. Can you comment on that?
Yeah, and who is that? Angela?
That's Peter.
Who is
Peter.
it? Oh, Peter. I'm sorry. I'm trying my best.
Angela's getting buffed.
He's getting waxed. He's getting the back hair off.
He's got a client meeting going on right now. We're just kidding.
No, Pete. That's a great point, and I actually wrote about it. There were 2 great posts on the blog this morning. One from Assures and the other from Mike Temple, who, when he writes, pay attention, because I had the pleasure of last Thursday sitting down with him for an hour. I had never met him. I mean, I only know him through the blog, like anybody who reads the blog. So he's here in Chicago, and we're actually going to go get together a little bit more. But he's exceedingly bright, is a very dynamic trader in a way that he understands the market. I was very impressed. And he has a great background. So we actually talked about this. And let me see the way I want to go about this. We made 2 points when we were talking Thursday. I say Mnuchin is the canary in the coal mine. Because he made a comment to me, he texted me, he said, after we had our meeting, he said, well, one thing about Trump, if he keeps hammering away at an idea, he usually sees it through. So if he's hammering away at Powell, you can bet he might try to get rid of him. And my response back, and this is the only reason I can share this with you, because that his ideas that he shares with me are his ideas. But because I buffed it up a little bit, I said, well, if you believe that, the canary in the coal mine is Mnuchin. Because if you see Mnuchin resign, then Trump will really go after Powell, because Powell was Mnuchin's choice, from what I understand. And we've talked about this. I don't know that but I've read enough things that lead me to it, and Mnuchin's still there, even I hold him in so little regard. But that's so if he was really concerned that Trump was really going to bash Powell, that he would probably have to say bye-bye. So keep your eye out for that. Number 2, and I wrote this in response to Assurance. They both had really good posts today. And we have to go back to blogs I wrote, and I wish people would go to the archive of WordPress and go back to some of the old blogs, because they still are very relevant. And that's Bernanke, who I call, of course, a 37er, because he made his whole bones on his work as an academic with the depression, the severe recession that sets in 1937, when the Treasury, U.S. Treasury under Mellon, I believe it was Mellon at the time, raises taxes to get the budget more under control, while the Fed raises interest rates. And that sets the economy back tremendously, because the economy in 1937 was starting to get legs. They killed it. And for a lot of the academics, especially Bernanke and what they call the Neo-Keynesian school, they felt that was the greatest mistake that was made to prolong the Depression. So I've always called them 37ers, because what that tells you is their greatest fear is deflation. Again, Volcker taught them that they can slay inflation. Central banks can always squeeze inflation by raising rates and curtailing the velocity of money in the system. They can bring it to its knees. It'll come at a high cost, but you can wring inflation out of the system. As we've seen with Japan, and this is driving Krugman and Bernanke crazy, although Krugman is far better at understanding it than Bernanke was. You can go read Krugman's books. You can disagree with him about his politics, but his work on depression economics was second to none. They don't know, their greatest fear is deflation, because they don't know how to kickstart.
Right. So if the yuan,
and prevent it.
So by that token, if the yuan depreciation started accelerating, that would be super, super dangerous.
Yep. Which is maybe what you saw. So Pete, that's why I say it's a great question, because that was running through my mind as I was watching that panic. I mean, that was a panic. I mean, interest rates were just friggin' melting. And it's not like in the old days where there was fear of a bank collapse or something that would drive you into treasuries. What was going on? So this fear that they will not be able to rein in takes hold, and especially with the Chinese, because that's exactly right. If you unleash those forces of deflation by pushing the yuan lower and lower and lower, you will get that. So thank you for bringing that up. mentioned it so many times, but sometimes you lose sight. But that's that is just point on. And you look around the world, and there's the interest rates are low. You can be Larry Summers and call it secular stagnation. I call it because I've disagreed with the outcome of the Phillips curve is that you have excess global labor supply and you have way too much capacity, which is what China was all about. You can't have that much capital formation. Sorry for going a little wonky here, but you can't have all that capital formation and bring on all that capacity and not put downward pressure on prices. That's what capitalism is all about. That's the way it works. That's why you get cycles, because money gets easy, then people get an idea, entrepreneurial spirits, you get all this capacity. The dot-com bubble, you guys lived through it. You know what that is. So you had all this capacity. And then people couldn't sell stuff. You could go on eBay and buy servers, for pennies on the dollar. Really good server. Sun Micro, because there was so much capacity built in anticipation of this. And that's what it does. And then the market clears itself. The problem is when central banks try to control the business cycle, and I don't mean soften it, and act as a what's the word I'm looking for? Act as a cushion against the effects of it, but actually try to control it. You wind up with you don't allow this capacity to be brought offline, and that's when you get zombie everything, zombie banks, zombie firms, and that's what you have now. Nobody closes, and a lot of small firms are complaining because they can't really get traction because there's all these questionable firms that are still in business because money's cheap enough to keep them there. Japan has gone through that for 20 years. So it's a great question that leads to the entire understanding of where we could, and I'm stressing is where we possibly could be. And maybe this is what we've seen for the last 8 days or so. And Trump has to be careful because, again, as we've warned and talked about here, these are thin markets. And in these types of markets, everything gets magnified.
If he wouldn't have opened up his mouth this morning, we would have been 50 handles lower than we were.
Yeah, and gold would have been at 1840. 1840.
No, 15. No, I don't know. The market was already feeling heavy, yes, so somebody may have known it's coming, but it wasn't. You know what? Markets do run, as we know, too hard and fast, and then they'll spend some time. We want markets to spend time in a churning correction mode. It's not always a delight, but it makes markets healthier. If we go just parabolic, it's really not good markets for trading because it's really hard to find entry points. Then you're just buying them and hoping. You know what? I hope they're going to go higher. But if I do my work and I have much more areas of sustained direction, then I have much better entry points and I can be a much better trader. I mean, that's at least the way I see the market.
Okay. So here, we got a question from Peter who can't pipe in, but he said the pulp comment mid-cycle, do you think he was actually being disingenuous, spitting in our face, never took his demeanor as such, or do you think they actually believe this? 210s are so tight, 1 5 bips handle ATM, I don't know if they say at the money or whatever.
At the moment.
At the moment, they simply have to cut again.
Well, they should cut again because you know what? Whatever damage they did was severe. And again, this is going to be the next blog, maybe tonight. I don't know. I'm really tired. I go back, and you can put it up. You got the Eurodollars there. Put up January 22nd, 2008. I'm not guessing here.
Wait a second. Let me get to the other screen, Ira.
Yeah, Ira, as we speak, the 210 curve is literally 2 basis points.
Yeah, it doesn't surprise me. Because now it's just on a mission. And until they intervene to stop it, he doesn't understand it. So let me answer that question. Did I think he was malicious? No, I think he misspoke because he thought that's what he was really doing, because that was the way for him to dance between Trump and the market. Oh, this is just a mid-cycle adjustment, because that's what he wanted to believe. And you saw what the reaction was. That curve, the 210 went from what, 23, 24 down to 14, 12, 13. So, and then I think he realized he really has just misjudged this.
Yeah. Ira, have you still been tracking the Canadian yield curve?
All right, hang on one second, Angel.
Yeah.
I got the euro dollar up for you, Ira. The D's 20s. Is that what you want?
January 22nd, 2008.
January 22nd, 2008. Hold on.
What do you, see if you can put up a day chart.
I got to go to a daily continuation to get that. Hold on.
Yeah, you'll have to scroll all the way back. I'm not in front of my screen, otherwise I could.
Oh, I'm doing it right now.
Okay.
All right, so it's July 08 when you had the big move?
No, January.
January. Okay, so
The
there's
day-
a low.
The
Yeah.
the day after Martin Luther King Day.
Okay.
See that? You see that move?
Yeah, straight up.
Yeah, that was the day. It was the day after Martin Luther King Day, and Europe was on fire, getting crushed on that Monday because Soc Gen was supposedly going bankrupt because of Jerome Criviel. My French is not good, so I don't pretend. And he is supposedly blown up the bank with a long option and futures position in the DAX and other European stocks. And the Fed comes in that morning, the day after Martin Luther King, and cuts 75 basis points. Cuts 75 basis points. Now, yes, somebody will say, well, interest rates at that day were, Fed funds were 5.25. They had room to do that. It had nothing to do with it. That was not a U.S. affair. That was totally based on something that was taking place in Europe. And so they have it in their playbook if they really wanted to do this. So if Jerome Powell is nervous, this gives him the ability. This is a precedent that he could certainly invoke.
Oh, sure.
Ira, two things about that period. The markets were sniffing out the failure of Bear Stearns, and there was no QE at that point, correct?
There was no QE. Bear Stearns doesn't happen until March.
Correct, right. But the markets were sniffing them out.
Yeah, they could, but that was a direct reaction to what was going on in Europe. I mean, you can look at the data. You can run all those charts on a daily continuation and see them. I mean, this is what I've been doing a lot of work on, because I talked about Korea because he's important for that reason. Because the Fed reacted to an event and a supposed holiday market. I mean, they didn't. That was done first thing in the morning. So I just tell you, be aware, because there is a precedent for it. That's all. That's all. You know what? I bring it to attention because it's in my brain now, and I'm paying attention. And if Jerome Powell really, first of all, he should really. And I've not been a big fan of these cuts. Anybody who's followed my work knows that. But now they've got themselves into the situation. He ought to cut just to remove himself from the discussion. And when I say himself, I mean the Fed.
No, that's
he needs to move. They
and
need
Ira,
to get out.
In his statement, in Powell's statement after the rate cut, he literally threw everything into the kitchen, including the kitchen sink, into the mix, which I think you pointed out as well. Yeah,
I thought it was very dovish outside of mid-cycle adjustment. That phrase caused a reversal of everything. But I thought his conference was dovish, but that statement, but we saw what happened post. Where are we at? gold turned around and went back on its merry way.
You know, he used Europe. He used China. He said trade tensions were on simmer.
Right.
Then the mid-cycle adjustment bullshit.
Right.
He also mentioned CapEx was trending lower.
Right.
It was everything.
Yeah. Yeah, that's right.
I never heard them use everything before.
And yet it was a painful day, for those who tried to step in and do a little bit something else, and thinking, well, I know what I heard, I know what I read from the statement itself, and I thought it was very dovish. It was not a good day of trading for me with that minute. But then it resurrected and I reestablished positions. But it showed me a lot of what the market wants to think and believe. So it seems that every day you get any kind of rise in interest rates, everything, the stock market now likes it and goes up because then everything's back to normal. So the interest rates are carrying the load for the entire market.
Ira, do you think that the ECB is going to have to do something prior to October 31st?
Well, they have a September meeting, so there's guesses as to what they're going to do because that's Draghi's last meeting where he's going to be the head of it. And, I mean, there's already people out talking another 10 basis point cut, and an announcement of another $200 billion in QE. And another 200. Now, I think if you see QE, you're not going to see QE buying bonds. You're going to see him buying bank stocks because the ECB has to own the destruction of the European banks. They can deny all they want, but they have to wear this as their mantle of glory. So, so I think you'll see them come in and buy bank stock. And in fact, there was a Bloomberg article yesterday that I totally disagreed with about their outlook on cocoa bonds, and people are buying cocoa bonds. I think you got to be out of your mind because what the banks will do as their equity capital gets depleted, they're going to convert debt because they can do it. They have the discretion in those cocoa, which are contingent convertibles, to take those bonds and convert them from debt to equity in order to shore up their balance sheet. But that'll hurt a lot of investors in Europe. So I think you're going to see Draghi make a very concerted effort. This is just my opinion from what I read, and you know I'm not shy about venturing my opinion, but my analysis tells me that he'll come in because now that he's got Powell trapped into this game, so now he may as well raise the ante and just buy European bank stocks, which the Japanese have done in Japan. There's a precedent for it. So that's my guess. There are those who think he's going to cut to negative 50 and they'll do a tiering system. Okay, maybe. But that just complicates things more and more. I wouldn't even touch the rates. What difference does it make? Negative 40, negative 50. Please help me with that. I don't get it. The 10 years are already trading under that anyway. So where are you going? Where are you going? What difference are you going to make?
Yeah. What is it? Negative 90, negative 95 on the Swiss 10-year?
Swiss 10-year.
Yeah.
Some of the stuff.
Yeah.
But, all these bonds are going back, including our bonds, are all going back to 2016 levels.
Yeah. And a lot of people have been short for a while. The bonds, I'm thinking bonds, bond futures, and bonds. And I think you saw that some of that panic, to go back to Tax's comment, you saw some of that panic last week. Don't forget some of the biggest bonds, even Gulach at times has been very, hey, sell bullions, it's the greatest short ever. Bill Gross, greatest short ever. Well, if they've had long-term positions on it, it hasn't been a position of great comfort. And we really haven't heard much. But I have to ask anybody who, as a portfolio manager of any duration, how can you possibly buy this? Because if, let's say the banks are successful in 6 months of getting inflation to 4%, how do you extricate yourself from these bond positions? Please, somebody help me.
It's the greater fool theory, slower fool theory. Sorry.
Yeah, Rich Dennis had it right long ago. All right, if there's any other questions, Judd, let me know, and maybe I'll make a return visit tomorrow. I got a lot of stuff going on. I really mind my P's and Q's now because I don't know if you guys know.
Yes, congratulations.
Hi, Annette. This is Peter.
They let you back in, Ira? Good for you.
Congratulations on
Yeah.
that.
Pretty good.
Yeah, thank you.
Jason,
Thank you. But,
been talking. I was talking to
so
Jason months
Peter,
ago.
mute out. Peter, mute out.
Water heater.
Peter, mute out.
This before season
All right,
comes.
All right, I muted him.
All right, yeah, congratulations, Ira. That was great news. I wanted to say something earlier, but I was waiting for you to say something too.
yeah, that's okay. So, where I'm usually so acerbic, I will be much more. And if I'm not, somebody please remind me.
I'll do it for you.
No, because it's rightfully so. When you represent, when I represent myself, everybody kind of knows. But when I am representing an institution in a certain capacity, you can do everything with greater dignity, and I know how to rise to that occasion. I don't have to be so flip. So you get the tone down Ira, but that's a better Ira anyway. Ask my kids. So,
Who's the better trader, the crazy Ira or the toned down Ira?
Tone down, because I'm much more focused, rather than all over the board, because, I kind of jump around, but the tone down is focused. That's the key word too, focus.
Okay, here, we got one more question floating in here. Joe asks, is there any thoughts would the ECB basically favor one nationality's bank stocks over another, like German versus Italian?
No, because they'll have to do it to the capital key. So, and don't forget, it's the Italians, the Greeks, maybe some of the Spanish. Santander is not in great shape. So it would behoove them to stay true to the capital key. So whatever the percentage is, because otherwise there's also, as we talked about previously before Judd went on vacation, there was that a new filing with 2,000 plaintiffs, to the German High Court. So they have to be very careful here. So I would believe it would stay in with the capital key. And you can go to the ECB website and see exactly what the capital key is. In fact, it would help everybody to be able to see it. And those are the restrictions, although Draghi says he can violate them on a day-to-day, week-to-week basis, but it's smoothed over time. He'll always hold true to them.
Okay.
Okay. All right. Thanks for taking the time.
Yeah,
covered a lot of ground.
Yeah,
good questions.
Very good.
These have to, and think of it in terms of deflation and disinflation, because that's truly what scares the banks. Listen to them; they'll tell you. Yeah, I'm not making it up. They'll tell you. That's why they have an inflation target, because deflation scares them. They don't know how to get out of it.
Ira, we've basically had secular deflation since the beginning of globalization.
Sure, that's a very good point, and that's right, and that does scare them, because first of all, why does deflation scare them? Because of the huge amount of debt that overhangs the entire global financial system. That's all. Because if deflation sets in, the ability to pay back creditors becomes that much more difficult. And then the system starts to
actually appreciate in value relative to your currency.
Yeah, and you see it. There's no denying it, which was what a beautiful thing the New Zealand bank did last week. And I was looking for it, so that was just such a great thing, because there was no reason for them to do it except that they were concerned about the strength of the Kiwi against the Aussie dollar. Put up the chart, you can see it. You're not making it up. It had been down to 3-year lows, down at 103, except for that one day in January January 3rd with the yen flash crash, but I take that out. It's such an anomalous situation. But you see it, and I knew, and that was all I was predicated upon. But they did it, and there's no hiding, and even Trump understood it.
Yeah, and they're trying to put an outside reversal higher month in right now. It's a big body.
They were successful with that. Because are we over 105? I don't know where I left it.
105.32 right now.
Yeah.
32.34.
Yeah, pretty good move that they orchestrated.
Yeah.
Charlotte's imbeciles and Fed governors.
I'm sorry?
Charlatans, imbeciles, and Fed governors, as noted.
Oh, that was yeah, Chris Whalen. That was a beautiful piece.
Unbelievable.
That was a beautiful. Him and I were emailing back and forth. I told him how much I enjoyed it. Really, he's one of the good ones. I will always read him, and he's always been very nice to me and very personal. So if I send him emails, I'm not name dropping. We do exchange these, because when I see somebody's work, who I think is really good, and if I have any contact with them, I let them know, because they need, we all need reinforcement. I get it by postings on the blog, and me coming in this room. Everybody needs that. It's a lonely place sitting out there, and when people appreciate it and really grasp it, it's good. His work was really good. That was really a great piece, and it took a lot. I give him a lot of credit for writing it, because here's a guy who could be a Fed governor. Why not? He's got all the tools. And to put himself out there like that really, can queer his chances with certain people. But I really thought it was a great piece.
Strengthen his chances if I had anything to say about it, it would strengthen his chances.
But you're normal.
All right,
you're outside. You're outside the academy, as we say. You're outside the academy.
Yeah. You have no voting rights.
All right, you guys have been trading great. You really generate great ideas. This is a very good conversation. We covered a lot of ground. I'll see you when I see you, or we'll speak when we speak.
All right, thanks, Ira.
Okay.
Bye.
Okay. All right.
Well, wonderful.